very extremely bearish market structure. Okay, and then of course right over here we do have this consolidation. So once price broke out of this consolidation, retested, and then of course we can foresee that price can come all the way down here. So this just might be the trade that I will be holding for the long term. Okay, because it has so much potential. Okay, guys. So this trade, the stop loss is only 20 pips. Right, the stop loss is only 20 pips.
Yeah.
I managed to snipe it. Okay, so yesterday I did mention that I want to take this trade somewhere along these lines like this, right? Just somewhere along these lines like this, at about 1.10550. Okay, so for those of you who were here yesterday, so this was the trade that I wanted to take, right? But I mean, even though you are in this trade, right, at 1.10550, right, you will still be in profit, right? But I decided to push up just a little bit. Okay, later I will explain why I decided to set the sell limit at 1.10600. Okay, so later I'll explain it a little bit. Okay, but for now, this is the potential. Okay, so this is the potential for the trade. Really, really awesome trade. So this might just be the potential. So this will give us a really nice 1 to 45. If I can just drag it down a little bit. There you go. So this will give us a really nice 1 to 45 risk reward ratio. Right, so I would say risking 1% will give you a 45%, and risking 2% on this trade will give you 90%. Okay, so just one trade, one monster trade, right? You're all set for the rest of the year. Okay, so we're gonna hold this trade for the long term. Right now, for those of you who have entered, okay, so for those of you who have entered this trade with me yesterday, okay, set your stop loss at break even. Okay, so set your stop loss at break even for those of you who have entered this trade with me. Really, really awesome trade. Congratulations to those of you who have entered. Wow, I caught this trade too, but it was second entry. Okay, congratulations. Okay, so Kelvin says, wow, I caught this trade too, but this was my second entry. Well done, Kelvin, well done. So for those of you who are in this trade, right, this is going to be a really, really massive trade, probably the trade of the year. Okay, so considering, right, we are towards the end of the year, right, this might just be the trade of the year. Okay, so it's a 1 to 45 risk reward ratio, right? Risking 1%, you gain 45%. Risking 2% risk on this trade, you gain 90% just by one single trade. And you're not risking 90% to gain 90%, you're risking just 2% to gain 90%. Okay, so amazing. Okay, congratulations, guys. All right, good evening, John, Jun Han, Kelvin, Carol, Min Ang, Noraida, Jabin, William. Okay, let's just wait a few minutes. All right, about two minutes or so, right, for the rest to join. Right. That's really, really awesome. All right, so guys, so this is why it's so important to join every single webinar. Okay, so because now for those of you who are new, okay, so I did notice that there are a few new names here. So for those of you who are new, let me explain to you why it's so important, right? To know to kind of join the webinar now. So how I usually do the webinar is I go through the most important things first, right? So we look at the economic calendar, and then we move on to the slides, which will finish the slides around 8:30 or 8:40, and then the last 20 minutes, okay, the last 20 minutes we'll be doing live analysis, trades that I'll be taking. We'll be taking trades together. So this is really, really important, right? If you want to follow my trade, right? If you're not, I mean, yeah. So even if you want to follow my analysis, you know, go through my trades, right? This is the way, right? How this is one of the ways that you can kind of see, look at what I'm looking at, right? So, awesome. Okay, now guys, so a little something that I want to go through with you. I have changed the link for the link tree. Okay, so I've changed the link for the link tree. Right now it's Chu Wei Xiang Prince for VFX. Right, so I changed it because of the SEO Google search stuff. Okay, so I was advised to actually change the link to the link tree. Okay, so if you are new and you don't know what this is about, so link tree is basically a link, and it's probably the only link that you use. Okay, right? So this link, it has the links to all links, right? You can join the webinar, you can sign up for the webinar here, right? You can sign up for the 2-year transformation program here, right? You can sign up for my trading course here. You can read some of my business, you can look at some of my news features. So I've featured in Business Insider, Yahoo Finance, Bazinga. I have a profile with XM Global as well. You can read me up on digital, a little bit of a stutter there, tongue twister. Digital journal. Okay. So these are some of the places where I am featured on. Okay, and of course, don't forget to follow me on Instagram. Guys, before we start this webinar, can you guys give me some love? So what I want you guys to do is, I want you to go to my Instagram, give me a follow, and then help me to like a picture that I just posted. Okay, can all of you do that? Guys?
Where is it?
Let's go.
No.
So go to my Instagram. Very nice, very good. Awesome. Thank you. So go to my Instagram. I just posted a new picture, the one in blue, when I'm wearing blue, which says against all odds. Okay, so give me a follow and like my picture that I just posted today, right? Cool. Awesome. Thank you, guys. Thank you. Okay, so what we want to go through today is okay, so let's go through the economic calendar first. Okay, so let's see what we're up against. Okay, so in 3 minutes time we have ADP, right? ADP, employment change. Now I can't remember everything. Okay, so according to the ADP National Employment Report, non-farm private employment in the United States is being monitored, right? It is also developed by the automatic data processing. So that's what ADP stands for, right? And it's based on actual payroll data from around 24 million employees. Okay, so this is not the full figure, but this is just 24 million employees. All right, so this is the ADP employment change. Okay, so now before I move on, okay, no. So sorry, I'll cover what we're up against today first. Okay, so S&P Global Manufacturing PMI for the Canada, S&P Global Manufacturing PMI for October for the United States, ISM Global Manufacturing PMI, and JOLTS, right, jobs opening. Okay, so these are some of the things that is gonna come later. It's gonna be at 9. Okay, and then tomorrow. So tomorrow is gonna be a really, really big day, right? Tomorrow we have the Federal Reserve interest rate decision. Okay, so really, really big day tomorrow. And then of course we have the Bank of England monetary policy report, and of course the Bank of England interest rate decision. Okay, and then we have some unemployment rates coming out on the euro, manufacturing PMI coming out for the euro as well. Spain, Italy, France, Germany. Okay, and then of course, so actually later, right? If you guys are in Singapore, right, later at 2 a.m., there will be the interest rate decision. Okay, so I'm probably staying up for that because I do have open positions that are currently running. Okay, and then now on Friday, right? Friday is a very, very important day. Okay, so Friday we have non-farm payroll. Okay, non-farm payrolls. So non-farm payrolls is basically all of the employment rate minus of the excluding the farmers, right, in United States. Okay, because we have the unemployment rate, stuff and things tomorrow. So non-farm payroll. Now, for those of you who have been around for some time, now let me just give you guys a test. Now, non-farm payroll. When does non-farm payroll data release? When does non-farm payroll data release? When does non-farm payroll data release? First Friday of month. That's right. First Friday. That's right. Okay, cool. So yeah, non-farm payroll is being released. Why is there
Eliza,
Great Britain flag? Oh, okay.
you left the thing without clearing the nonsense out of it. I open the thing, everything drop out.
Okay, so non-farm payroll, right? Data is being released on the first Friday of every month. Okay, so
Very irritating,
this Friday is going to be the first Friday of the month of November. Okay, so non-farm payroll is set for Friday. Okay, now let's go ahead and start today's slides. All right, so today we're going to look at Japanese candlesticks, but just give me 1 second first. Okay, and I want to kind of see. I just want to kind of see the ADP employment change. Okay, the ADP employment change 113K, 89K. Okay, it's worse than expected. All right, so I just want to quickly go to look at my pound Swiss and make sure it's not affected. Okay, Kelvin, where is your entry on CAP? Where is your entry on CAP? Pound CAP. Where is your entry on CAP? Oh, sorry, pound Swiss. Okay, okay. While waiting for Kelvin, okay, cool. Later I'll take a look at it. Cool. Later I'll take a look at it. Yeah. Okay. Now let's start with the slides first. Now today we're going to talk about Japanese candlesticks. What is Japanese candlesticks? Japanese candlestick patterns, right? And of course, Japanese candlesticks with support and resistance, right? Is what we call a confluence. Okay, when we combine the candlesticks with support and resistance. Okay, so what is Japanese candlesticks? Now, Japanese candlesticks is developed by this guy. If you guys can pronounce his name, by all means go ahead. But let me try. Okay. It's developed. So Japanese candlesticks is developed by Munihisa. Munisa Mun Mun Muni Munihisa Homa. Okay, so it's been developed by this guy basically, right? Some guy that I cannot even pronounce, right? But anyway, it's basically just this guy, a Japanese rice trader. So back in the day, right? When they are trading rice. Okay, so the price of the rice would fluctuate up and down, and I mean that is a type of commodity trading. Okay, so Japanese candlestick shows the price data over a period of time, right? And the data that it shows, right, is the open, high, low, and close, right, or what we call the OHLC. Okay, so if for those of you who are confused, sorry, hold on. So for those of you who are confused, what is OHLC? Basically means open, high, low, and close. Now, hold on. Let me just send you guys okay, what is the link? Okay, let me just send you guys the link once again. Okay, there you go. Okay, cool. So OHLC basically means open, high, low, and close. Okay, and later I'll go through what is open, high, low, and close means. All right, so a bullish candle. So there is two types of candles, right? Bullish candle and bearish candle. Okay, so the upper wick, right, is called or what we call. I mean, over here it calls the upper shadow. I mean, you can call it upper shadow. You can call it upper wick. Honestly, it's up to you, right? Because why do I call it wick, right? WICK, right? It's because candles, when there's candles, there's wicks, right? Wicks are the one that you use to burn off, right? Where you leave the wick on flame, right? So the candle will burn, right? So the upper wick and there is a lower wick, right? And this represents the highs and the lows of the candles. Again, no matter it's a bullish candle or a bearish candle, okay? So there will be a high and low in that specific time frame. Okay, cool. So let's say later I'll go through with you guys more about candlesticks and stuff, right? And of course we have the this is now I just want some I want some participation. Okay, so guys, listen up. So the white candle, is it a bullish candle or a bearish candle? Bullish candle or bearish candle? White candle. The white candle is bullish or bearish? Very good. Very good. Awesome. So why is it bullish? Is because it opened at this point and it closed higher, right? It closed higher, meaning to say that price went from the open up all the way to the close. That makes it a bullish candle, right? Vice versa, right? For the bearish candle, it opened high and it closed lower. Okay, so this is how we identify bullish and bearish candle. Next, so Japanese candlesticks patterns. There are three types of Japanese candlestick patterns: single candlestick patterns, dual candlestick patterns, and triple candlestick patterns. Right? I'll go through some of the really common ones that I use. Okay, so single candlestick patterns, there's basically the doji, hammer, and hangman, inverted hammer, and shooting star. Okay, so the doji, four types of doji. We have the common doji, long-legged doji, gravestone doji, and dragonfly doji. Alright. Okay, so doji is a trend reversal indicator, right? The common doji and the long-legged doji, right, is indecisive. It's an indecisive candle. Okay, so the common doji and the long-legged doji. right? It's really, really proportional. How do you identify is that it's really, really proportionate? Okay, it's proportionate, meaning to say that there's equal highs, equal lows, and a price close and open and close at almost the same price, right? That forms a doji. Okay, so the gravestone doji signifies the end of an uptrend. Okay, so this is the gravestone doji, and the dragonfly doji signifies the end, right, of a downtrend. Okay, now I'm gonna explain a little bit about the candlestick psychology. Okay, very good, guys. Okay, so I'm going to explain a little bit more about the candlestick psychology. Now, what do I mean by the candlestick psychology? Okay, so candlestick psychology is basically, right? So if we were to look at this, okay, let me draw my pen. Okay, I'm going to take up my pen. Okay, so let me know if you guys cannot see the drawing. All right, then I will go on to my robot. Right. So this is the gravestone doji. So price does something like this.
What are you doing again?
Okay, so this is basically it signifies the end of an uptrend. Now, why? Now, okay? Before I continue, can everyone see my chart, my drawing? Can everyone see my drawing? Press 1 in the chat if you can see my drawing. Awesome. Okay, so this is what we call a gravestone doji, right? And the reason is very simple. So if we were to look, over here, right? Basically what the price action is telling us is that buyers tries to push the price up. However, sellers take over control. So sellers take over control and bring the price back down, and hence the open and close is almost at the same price. Okay, so this gravestone doji basically tells us that sellers are taking over the market. Okay, sellers are taking over the market, buyers are losing. Right. So now because how price works is that there is constant battle between the buyers and the sellers. Okay, so if there are more sellers, right, so buyers try to push the price up. However, they are met with sellers all the way at the tip over here, right? And then sellers push the price down. It signifies that sellers are trying to take over the control, okay? And buyers are losing control of the market. Okay, so vice versa for the dragonfly doji. Okay, so vice versa for the dragonfly doji. So this might be. So vice versa for the dragonfly doji, right? Sellers try to push the price down, however, they are met with buyers, right, which push the price back up, and it closes, right? It closes near the open, right? It signifies the end of a downtrend. Cool. Okay, everyone understand this so far? Press 1. Press 1 in the chat again if you understand the psychology right behind the doji. Press 1 in the chat if you understand the psychology behind the doji. Awesome. Very good. Okay, looks like I think most of you understand. Right, now for those of you who don't understand, right, just feel free to just type in the chat, type in the questions. Hey, can you repeat? Or hey, I don't really understand certain things. Can you please explain or can you please repeat certain things? Okay. Now moving on, we have the hammer and hanging man. Okay. Now the hammer and hanging man is also quite similar, right? The hammer and hangman is also quite similar. Now, if you have to look now, hammer is a bullish reversal pattern that forms during a downtrend. And the hangman is a bearish reversal pattern that forms during an uptrend, right? So these are the criteria for a hammer and a hangman. Okay, so now if you were to look over here, right? Okay, so the hammer, so price is going down. However, suddenly there is a hammer. Okay, there is a hammer. So the psychology behind the hammer is that sellers try to push the price down. However, they are met with buyers which push the price back up. Okay, so hold on. Okay, so sellers try to push the price back down. Sellers try to push the price down. However, they are met with buyers. Okay, which push the price up. Okay. Now, what about hangman? Hangman is basically buyers tries to push the price up, and yes, sure, it did push the price up, right? However, there are sellers in this area, okay, which push the price down. Okay, now when it pushed the price down, however, there are still buyers in this area, right? Which kind of leaves a hangman, right? Now the psychology behind the hangman is that it tells us that there are sellers at this level here, and that when there are sellers at this area here, right? Sorry, when there are sellers at this area, right? It might be a potential for it might be there is a potential in a direction reversal. Okay, so basically it tells us that buyers try to take control. However, sellers, right, they push the price back down, right, to kind of signify. So before it leaves this weight, right, price has to push down over here, right. So it tells us that hey, there are sellers in this area. However, buyers still got back a little bit of control. So buyers are losing control of the market, and there are sellers coming in, right. So this is the psychology behind the hangman. Okay. Now next, we're going to talk about inverted hammer and shooting star. I mean, these are a lot of these are actually my personal favorite candlesticks. Right? When I see them and I'm in the trade, that's super good. Okay. Now inverted hammer and shooting star. Okay, so inverted hammer is a bullish reversal candlestick, and a shooting star is a bearish reversal candlestick. Okay, so inverted hammer. Now, inverted hammer, how can we see an inverted hammer? Now, inverted hammer is basically now. So if you look over here, right now we are in a bearish market, right? However, there is an inverted hammer, which kind of signifies that there are buyers in this area. Now, if you notice, inverted hammer and hanging man is quite similar. It's just same but different. Just a bit if you guys are from Singapore, just from Balik, right? Which means it's just the opposite. Okay, so the hanging man and the inverted hammer, right, is similar. I mean, it's the same. It's just that it's one is used at the end of the uptrend. One is inverted hammer is used at the end of a downtrend. Okay, and then of course you move to shooting star. Okay, so now the psychology behind shooting star is that, right, price is bullish, right? Buyers try to push the price up, however, sellers take control, and then try to push, and then of course buyers are losing out on the market, right? And of course, which kind of tells us that sellers are about to take control of the market. Okay, so this is the psychology behind the shooting star candlestick formation, right? Now let's talk about dual candlestick patterns. Now, engulfing candle engulfing candles, tweezer bottoms, and tweezer tops. Okay. So what is engulfing candles? Now, engulfing candles is basically bullish. Okay, so there are two types of engulfing candles: bullish engulfing and bearish engulfing. Now, a bullish engulfing basically is a bullish trend reversal, right? And a bearish engulfing is basically a bearish trend reversal. Now, what do I mean by and how do you identify a bullish engulfing or a bearish engulfing? Now, if we were to look over here, okay, if we were to look over here, we can see that this is a bearish candle, this is a bullish candle. So the bullish candle, right? I mean, it can open at the same price, right? However, the high, the price that the bullish engulfing candle closed is higher than the previous bearish candle wick. Okay, so this is the bearish. This is the previous bearish candle wick, and just mark it. And of course, so this is the high point, right? This is the high point. Okay, so this is the high point, right? The one in red. Okay, oh no, circle is also in red. Okay, makes it hard to see. Let me put it to blue. Okay, so this is the high point. Okay, so this is the high point, and this is where the bullish engulfing candle closed. Okay, so the bullish engulfing candle closed above the high of the bearish candle. Okay. So this is how to identify a bullish engulfing. Now, similar, right? If we look at the bearish engulfing, okay, we can see that the bear candle, right? The bear candle engulfs the previous candle, meaning to say that the bear candle, so the low of the bear candle, right, is lower than the lower shadow of the bullish candle. So it engulfs it completely. Okay, so it closed lower. Okay, closed lower. So this is how to identify a bullish engulfing and a bearish engulfing. Okay, next. Now, tweezer tops and tweezer bottoms. Now, tweezer tops and tweezer bottoms are quite similar. Okay, so tweezer tops has almost the same height, and tweezer bottoms has almost the same low. Okay, so basically, if you notice, right, both candles with a really, really long wick, which is, yeah, so sorry, both candlesticks, right, have similar wick length, right, in terms of the price, right, that would consider as a tweezer top or tweezer bottom. Okay, so if you were to see, right, the lows of both candles is similar. Okay, for tweezer bottoms, and for tweezer tops, the highs of both candle wicks, right, is also similar. Okay, so this is how to identify the tweezer tops and tweezer bottoms. Now, triple candlestick patterns. So evening and morning stars. Triple candlestick patterns are evening and morning stars, 3 white soldiers, 3 black crows, 3 inside up and down. Okay. So let's look at the evening and morning star first. Now, this is where it gets a little bit more complicated. Okay, so the morning star is a bullish reversal pattern. Evening star is a bearish reversal pattern. Okay, so evening star is bullish reversal pattern, and sorry, the morning star is a bullish reversal pattern, and evening star is a bearish reversal pattern. Right. So the first candlestick is part of the trend. The second candlestick is a doji, and the third candlestick is a reversal confirmation candle. Okay, so what do I mean by this? Now, so the first candlestick is part of the trend, because Okay, so if you look at Morningstar, first candlestick, yes, it's part of the trend. So this over here is a bearish trend, right? It's a downtrend. So there is a bearish candle. Second candlestick is a doji, and then the third candlestick is a reversal candlestick confirmation candle, right? Because we have a doji, right? So sometimes you might say, hey, actually there's a doji, so it's good enough for us to take a trade. But if you want further confirmation, right? If you want some more confirmation, just want to be super sure, okay? Then of course we can use the morning star, right? And of course, vice versa for the evening star. So the first candle is part of the trend. So what we can see here is that we can see price action here is actually bullish, and then there is a doji, and then the third candle, right, is a reversal confirmation candle. Okay, which kind of tells us that hey, really the price is really going to reverse. Okay, this is just adding more confirmation, right? Now, usually I don't really trade this because then the risk now because I'm an experienced trader and my risk reward ratio is super high. If I were to wait for the third candlestick, the risk reward ratio won't be that attractive anymore, right? Because my stop loss will be wider, and so I usually just trade on the doji itself. But if you want to practice, right, if you want to be super safe, and if you're sick and tired of losing, then of course do implement the morning star and the evening star. Okay, next we have the three inside, up, and down. Now, the three inside, up, and down is a trend reversal pattern. Okay, so the first candlestick, yeah, don't worry. Don't worry. So for those of you, yeah, so don't worry. The slides will be sent to you at around 10 p.m. So 1 hour after the webinar, about 1 hour after the webinar, the slides will be sent to you from XM, right? So you're sent to you via email using the email that you have signed up. You have used to sign up this webinar. All right. So don't worry. Right. All the slides will be sent to you. Okay. So three inside, up, and down. Okay. Now three inside, up, and down. So three inside, up, and down is a trend reversal pattern. Okay. So the first candlestick should be long. Second candlestick should go to the midpoint, and about the third candlestick should go higher. Oops, should go higher than the first candlestick. So the first candlestick should be long. Second candlestick should be at the midpoint. The candlestick should go higher, right? So this is a reversal. It should go higher, but it should close higher than the first candlestick. Okay. So you can see, right? So if I were to draw a line over here, okay. So this is the high of the first candlestick, and the price closed over here, right? So it closed significantly higher than the first candlestick. Now let's look at the three inside down. Okay, so again, the first candlestick should be long. Okay, part of the trend. Second candlestick should go to midpoint or to the midpoint of the first candlestick, and the third candlestick should go lower. Right, this three inside down. So first candlestick should go lower. Okay, go lower. Oops. Okay. So this is another trend reversal pattern, right? Candlestick patterns that you should take note of. Okay, and we are done with the slide. Now before I go over the so before I go over the trades, and before we move on to live analysis and live trading, okay, I just wanna spend some time, about 3 minutes, right? Just to see if you guys have any questions. So I'll allocate 3 minutes, right, for Q&As. So if you have any questions, right, you have 3 minutes to type out your questions. Okay, if you want me to go through certain stuff on the slides, do voice out now. Oops. Oh no, my intro is coming out. So 3 minutes. We'll start the live trading and live analysis at 8:45. That will give us 15 minutes for live trading and live analysis. Oh, John, Junhan, any questions so far? Noraida, Richard, how are you doing? Oh, somebody added a picture. Oh. So I think I don't know. I think Google just added this picture. Oh, okay, this is new. Now while waiting for Q&As, right? This is something new. It's something new. I don't know why all this stuff. So even this is also quite new. I think this picture, yeah. This picture. So this is new. And this is new as well. Then I take the picture from my LinkedIn or something. So it's a name, I can't even pronounce this name, but it's a financial genius emerged from the bustling city of Singapore in 1998. His journey into a complex world of finance commenced at astonishing age. Trading, financial markets, basically offshore his peers. His early times. Yeah. Born in 16 March 1998, young age, whatever. Oh, okay. He was 5 years old. As of latest available data, Prince for VFX manages a total of 70 million. Okay, at least they got this right. I think it's quite accurate. I think this wiki, which is quite accurate. I'm trading a justification of 50 million in Forex and 20 million in venture capital. Yeah, awesome. So this is new. When was this posted? Did they date it? No. Oh, 31st of October. So yesterday. So today is the first. Yeah. So yesterday. Okay. Awesome. I think when you Google my name, there are some links which are not me. Okay, like this and this and this. Okay, let's check. Okay, how do you know if you know if you should enter or not from a doji without the third candlestick? Okay, so basically, what I do is I do this thing called the. So what I do is nice. My beauty shade affair is doing good now. Now, can you see what pattern is this? Can you see what pattern is this? So if we were to, I don't really want to remove it. Let me just hide it. Okay, so this is what pattern. This is I think it's a hanging man. This is a hanging man. So the names are not really important. Most important is the node. Yep. So this is a hanging man. Okay. So without the third. So even if this is a doji, okay, so let's say for example, this is a doji, right? So this is a doji, this is a hanging man, right? So doji over here, hanging man over here. Now, how do I know if I should enter a trade without the third confirmation candle? Now, if we have to wait for the third confirmation candle, right? We have to wait for this candle, which would be really long. Okay, I mean, this is now a perfect confirmation, right? But of course, now we miss our trade. Now, the question is, how do I enter a trade, right? Without knowing, without looking at, hey, is this a doji or is this, should I enter a doji something? Yes, it's a hanging man. Okay, so now what I do is I combine, right? Okay, so don't ignore the indicators, right? Let's not look at the indicators. Okay, so what I do is I combine. Okay, so I combine this level of support, level of resistance, and then of course, once for doji or a hanging man or candlestick pattern is formed, dual candlestick or single candlestick pattern is formed, right at the level of resistance or level of support. Then of course I would be taking, I'll be happy to take a buy. Okay, so if we were to look over here, right? So over here, what we can see is over here there is area of support, right? There's an area of support. So price broke below this area of support, retested as resistance. Right now, it's coming down towards the downside. Okay, so it looks something like that. So this is a support, right? And then price broke down, retest, continuation. Okay, so this is the kind of like the basics of trading. Kind of the basics of trading, right? So you can see over here is a price is the area of support, right? So when price broke below the area of support and then it retests, so this support becomes resistance, right? So when support becomes resistance, what we can do is that we can look for candlestick patterns, right? So over here with the doji, over here we have a hanging man, right? So we don't so that's why I don't really wait for the third confirmation candle. Okay, so imagine if I were to enter a sell over here. Okay, so imagine if I were to enter a sell over here, and my stop loss will be somewhere around here. Okay, will be somewhere around here. Okay, and let's say my entry is somewhere around here. Okay, so my take profit might be somewhere around here. Let me just draw it up real quick. And my take profit is somewhere around here. So you can see, right? So if I were to set a take profit here, right, it would be 1 to 12. If I were to take entry here, right, the risk reward ratio is only at 1 to 12. Okay, 1 to 12. Now remember 1 to 12, right? Now if I were to enter a sell over here, right, remember 1 to 12. Meaning to say, what is 1 to 12? 1 to 12 is basically if I would take, if I'm going to risk 1%, right, I'm basically getting a 12% back, right, when price reaches this level. Now, I want to bring you back to where is my object tree? Here. Where is the object tree? Okay, hold on. Let me just find my object tree. It should be somewhere around here. There you go, object tree. Oops. Okay, so now just now was a 1 to 12 risk reward ratio. Now, if I've taken a shot over here, right, this would be a 1 to 45 risk reward ratio. So 1 to 12 risk reward ratio versus 1 to 45 risk reward ratio. Okay. Thank you, Kelvin. Thank you. Okay, so yeah, so this is the difference, right, between if I have to wait, if I have to wait for if I were to wait for the three candlestick pattern versus you just enter at the doji, right, on key levels. Right. I hope that answers your question. Closing candle. So right, enter at this close of here. So enter here and candle that is open right now. Right, you at trading, let's say about two, don't really need the candlesticks to tell you. I mean, the candlestick chart, right? You would kind of know when should you enter, when should you exit, where do you spot key levels to take sells, to take buys, where should you take sells and take buys from, what are your entry rules, what are your exit rules. Now, if you want to learn how to create, right, your own trading strategy, I have a 2-year transformation program, basically a 24-month transformation program. Basically, you'll be learning how to basically develop your own unique, personalized trading strategy, right? Okay, so I have a 2-year transformation program. I'll drop the link over here. So if you're interested, right, to sign up for the 2-year transformation program, just click on the 2-year transformation program. It will bring you to a link over here. Just fill up the form, right? All information over here will be strictly confidential, right? So fill up the form over there, and of course I'll get back to you. Okay. It's not 6 cents. When I see the hanging mat, I really wait. Yeah, so you can wait for the candle. Now, of course, you have to wait for the candle to close to confirm that there is a hanging mat. Right? You cannot say, hey, no, the candle is still open. So you have to wait for the candle to close to know that there is a hanging mat, right? But it's not a 6 cents. But it's actually yeah. So it's actually more of experience, right? It's actually more of experience. But of course, if you're just starting out trading, just stick by the candlestick patterns. Okay, cool. Now, yeah. So there are a few. I have a few programs that I'm running. So the first one is the 2-year transformation program. So the 2-year transformation program is something that I just launched about 1 month ago, and So currently I have around less than 10. So the 2-year transformation program is basically I'm actually looking for around 10, I would say more or less around 10 individuals, right, which I want to kind of transform their life over the span of 2 years, and to get them where from whichever situation that they're stuck from financially, right? Don't ask me to help you find a girlfriend or help you find a wife, right? I'm sorry that one I cannot help you as well, because I'm also hopelessly single. Okay, but if you want to kind of get from where you are now to where you want to be, right, in future, and you want to kind of achieve that kind of financial freedom, to have a high value skill that is unique and personalized to you, then sign up for the 2 year transformation program. Because this is, I mean, and of course, I'm not going to enroll too many people in. And the reason is because I kind of want to focus on that few people, right, about 10 people or so, right, and kind of give them my full and best attention, right. So if you are someone who wants to kind of unstuck a situation in your life, sign up for this program, right. Drop your form in, right. So basically fill up the form, and not everyone will get selected. Okay, so I hate to break it to you, not everyone will get selected, right? So fill out the form, and based on your answers on the form, then of course I will see if you're selected for the 2 year transformation program. And if you're selected, I'll drop you a message on WhatsApp or on your email. Okay, and then of course we'll discuss from there. All right. So this 2 year transformation program is something that I'll be working on. So I basically want to groom about 10 individuals to be the rising stars, right? To be the rising stars of Forex, right? To be the next rising stars of Forex. Okay, so I think back in 2021, yeah, I think back in 2021, right, I was actually ranked number one. So I mean, okay, so this is some of my okay, so this is a old page. Actually, I think we took this picture from the XM website. Okay, but anyway, so I was ranked the top performing trader in Southeast Asia, right? Currently managing 70 million assets under management. Started managing funds when I was 22 years old. Right now I'm 25 years old. I was ranked as the rising stars in forex trading, right? For Singapore 2021, acknowledged as a popular guru for 2023, and ranked the number one most successful forex trader in Singapore. So these are some of my achievements. Okay, so these are some of my achievements at 25 years old. Of course, it didn't come easy, but hopefully I will see you guys there, right? Hopefully I'll see your name on the sign up on the sign up form, right? But unfortunately, guys, this is all the time I have for you guys today. Hope you guys learned something new, and hope you guys enjoyed this session of the evening webinar. And I hope to see you guys tomorrow, right? So don't forget, right, to sign up. So I mean, if you want to catch trades, right, and if you want to enter trades and watch my analyses and kind of know what's going on in the market, right? Join me every day, not every day, Tuesday to Thursday, 8 p.m. to 9 p.m. Okay, so sorry, 8 p.m. to 9 p.m. Tuesday to Thursday. Sign up with this link over here. Okay, so so that's why you should now. Can everyone do me a favor, right? And copy this link and paste it on your notes, right? Copy this link, go to your phone, copy this link, paste it on your notes, right? This link would be the most powerful link, the best link you will ever need. Okay, sign up for my webinar over here, right? Career transformation program over here. Instagram, contact me if you have any questions over here. On Telegram, you want to connect with me on LinkedIn? Sure, the link is over here, right? Cool. And once again, ladies and gentlemen, I hope you guys enjoyed this session of the evening webinar. Hope to see you guys tomorrow. Have a good evening and good night. Unable to put the link. Can I click the link? Oops. Okay, if you have trouble clicking the link, just send me a message on Telegram, and then we'll catch up from there. Right? All right. See you guys. Good night.